Welcome, everyone. This is a Zoom call with the New York Multifamily team, and this is the first time we will actually be doing a video version of a Behind the Bricks podcast as well. So if you are listening to this in podcast form, we apologize if the sound quality is a little different, but we are doing the best we can under the circumstances. So everybody is asking, how is the coronavirus impacting the New York City multifamily world? And this will be part of a couple part series because we're now about 2 weeks into this. And Joe, I want to just start off with you. What is your sense of the biggest question or the top question that New York City multifamily owners are asking right now?
Thanks, Peter. I got to say, it's been a couple of weeks since we've seen each other, and it's nice to be on a video call, but I miss everyone and hope everyone's doing well and everyone's family's doing well. What are people asking me? I think it's pretty much the same question. What are others doing? And I've been a big resource of information because I'm talking to everyone I can, whether in professionals, bankers, clients, owners, landlords, retail leasing brokers, and trying to get all that information so that, everyone wants real-time info right now. So I think that's a key part and a resource that I've been to my clients at this given time. And, it's obviously crazy times and everyone's reacting to it differently. The other big question, am I going to be paying my mortgage this month? Should I be paying my mortgage this month? So that's been on top of mind because we'll see April 1st, if you think about it, this happened, call it March 8th. Rent is not due till April 1st. So a lot of clients are obviously concerned what that's going to look like, how they're going to pay their bills, how they're going to pay their mortgage, and what I should be doing and who I should be talking to. Should I already reach out to the bank or not? So that's kind of a lot of the framework of the conversations that I've been having.
Yeah, for sure. And over the next couple of weeks that'll develop. So Shaun, we were just talking about this before we got started. We're closing some deals. We closed a deal yesterday. We're putting some under contract still over the past 2 weeks. What type of deals are getting done and which ones are having difficulty right now?
Yeah, I can give a couple, fact points. Pre-crisis, we had 9 contracts out on the Brooklyn and Queens side of the team. Of those 9 contracts, 2 have now been signed in the last 48 hours, both straight multifamily properties, one in Prospect Heights, one in Carroll Gardens, both signed under 5% price adjustments, one signed with no price adjustment just due to continued competition. It's very difficult to do any new deals right now, but we are focused as a team on resuscitating, the deals that have already been due diligence, that have already been toured, where we don't need to physically be in the city to consummate the transaction. So those 2 have signed. There's an additional 2 properties I think we'll sign today with no price cut whatsoever. Those are both 100% rent stabilized, low, average rent type buildings. And then the other 5 that have not yet signed are not dead, but are on pause. And, it makes sense. Those are more of a retail component or a mixed use component where there's a little bit too much uncertainty about how to value the retail component of that property. But, I would say that most of my efforts have been just, getting through the chute what we have contracts out and or dealing with any types of retrades coming on properties that are on contract. But, having spoken with a lot of other brokers, over the last few days and just our own, anecdotal observation, the deals that were already underway, we haven't had to adjust pricing. The highest one was 7%. So I think buyers are looking to close on what they already have existing in the pipeline.
Okay, so I'm sure there are people who are listening to this who are wondering who that doesn't make sense to. Like, the world has changed. The stock market is telling us that we're in not only a recession, but that we're in a pretty deep recession. And this is something that we imposed on ourselves as the world as we know it just kind of shut down in such a quick fashion. And with the layoffs that have already been announced, and some of the other predictions about corporate earnings, we're not it's going to be harder to restart the engine. It was a lot, I guess you could say it was a lot easier to shut it down so quickly. It's going to be harder to restart it. It's going to take longer. So I'm sure when you say that, I'm sure there are people listening to this who are thinking, are these buyers out of their mind? Why did they go forward with very, either no price reduction or very small ones? You have the stock market losing 30% of its value or whatever. So what was in the mindset of the buyers that they still moved forward, or what were the dynamics of the deal that they still moved forward without a reduction or without saying, hey, let's pause?
I mean, they did get a slight reduction in some, but again, these are straight residential multifamily properties. 2 of them are 100% stabilized. It goes back to the theory of rent-stabilized investing. You're kind of artificially protected on the downside. It's going to be very difficult for those tenants to give up the lease. And over the long arc of justice and in our city and equity creation, these look like very risk-adjusted bets. Secondly, I think on the residential side, people, while anticipating a rent correction and some dislocation, they are in it for the long haul. And if they can get a little break on price now, they believe that New York City residents will come back. And, again, you don't buy a property wondering what it's going to be worth in 6 months. At least I don't think that's the way to buy. You're never going to end up buying anything. You got to ask yourself, what's it going to be worth 2 years from now? And I think when you take the 2-year question, you say, you know what, I don't want to punt on this deal. I still like the address.
That's a very good point, that when you buy real estate, you're not buying for, you're buying for the long term. Another thing you mentioned there is basically the dynamics of stabilization. I think in a way it's ironic when you look at the stock market going down by 30%. And what happened to New York City multifamily landlords who had stabilized buildings in June, where their assets went down almost overnight in another type of black swan event by about 30%, some a little more, some a little less. So you're pointing out that there's this inherent value. A lot of people invested in rent stabilized assets as a recession hedge. And you're basically pointing out that it performed that way. Seth, so much of the product that you deal with has a majority of stabilized tenants. Are you noticing that as well in terms of, the conversation about what are things worth, where a buyer is showing up, and, how are sellers adapting?
Yeah, I think, frankly, it's a little early to figure out what things are worth. I think like everyone else is experiencing, April 1st or that first week of April is going to be a really big indicator really across the country as to how price adjustments, if any, are going to occur. The past week, basically every conversation with a landlord has been they're prepping for April 1st as to what collections are going to look like. I've asked people, how are you dealing with this across your entire portfolio? And almost every single one of them has said that they're going to deal with it on a case-by-case basis. So they don't want to put this blanket policy across their whole portfolio. They rather deal with it case-by-case, tenant-by-tenant. One of the things that has also come up as relates to contracts that are negotiating right now, I'm learning what force majeure is. This is something that probably most people haven't experienced yet, but it's
and how has it come up for you?
In negotiating a contract, as the lending environment has changed and is changing, right? Like, this is still an unknown. People are asking for this clause to be put into the contract that basically removes the obligation from closing from actually both parties, buyer and seller, if there is a force majeure, which is Latin for superior force, I learned. Basically an act of God that prevents someone from closing. And I believe it's essentially a subjective way to look at things. So I was on a conference call yesterday with an attorney and the seller of the deal. And I said, like, guys, is today a force majeure is today a force majeure day? Like, would someone have to close or fulfill their obligation today? And they didn't know.
Yeah.
They didn't know.
Well, I think this goes to the point of the buyers we want to work with right now, which are not requiring a lender, and sellers don't really like the idea of a 90-day close. If you're out there and you've been looking for a break and you're truly all cash and ready to put a clause in the contract that no lender is going to be involved as a requirement, please call me.
Yeah. Well, for sure, Shaun.
There are a lot of buyers out there, cash, looking for opportunities, and the opportunities are coming. So that's something, we should all talk.
Joe, can you expand on that? Because we were having a conversation 2 days ago. Actually, we were having a little Zoom call a couple of days ago, and you said to me, whoever you were speaking with a couple of minutes before said, I'm just gearing up. I feel like this is going to be the best market I've ever had from the buying side. He said, what happened in June was so disruptive, and now this is going to be incredibly disruptive. This is on par with the disruption that 9/11 had in the Great Recession, and it's such a world event and so unprecedented. It's like a hurricane hitting the entire country. So what did that expand on what that buyer said, and what do you think that means for the marketplace?
So the exact quote was, I've been doing this for 20 years. This will be the biggest buying opportunity of my career and most people's careers. I've been getting a lot of calls, obviously, from buyers, from sellers, from different industry professionals. But the biggest thing when someone calls me now, and I know it's an active buyer that wants to get back into the marketplace, and they said, are you calling to check on me, or you smell blood and you think there's opportunities out there? Because it's a little early, but there are definitely sellers that are in positions, unfortunately, that may have to sell, whether they took a hit in the stock market, whether they just want some liquidity, for a rainy day, which now it is a rainy day. So they're looking for, to liquidate some of their assets. And we're starting to see that. And what that looks like and why sellers are starting to raise their hands in this environment now is that there's thoughts that in 3 months from now, there's going to be a lot more distress and pricing will come down dramatically. So if I could get out in front of it in this unknown environment right now where we are, and get a price that I'm comfortable with, I will sell and then figure out what my next opportunity is, whether it's to go into the market, because I think the stock market is down 30-40%, like you mentioned, Peter, and that's what I'm seeing. So people are trying to get out in front of the potential distress coming down the road.
Well, I think if you look at how this kind of develops, you've had the Fed stimulus package that was passed so quickly, and the playbook that was used in 2008 was kind of unearthed, and they didn't have to come up with it from scratch. And so the response from the federal government in that way has actually been really quick. And then you have other parts of stimulus that affect policy. And one of the unknowns that we have relative to the distress in the market is, does the federal government enact anything that protects commercial owners who are caught in this kind of chain of events in terms of mortgage foreclosures or pressure from a mortgage? Does the federal government compel owners who give leniency to their tenants? Do they make it so they can't be foreclosed on for 3 months or 6 months? So they require the lenders to work with the owners. So that's going to be really interesting to play out, because this is not just a simple situation of, someone went out and bought 10 buildings and overextended themselves and didn't prepare for an economic downturn. It's really an unprecedented event, and that's just something that I don't think we know, and it'll really impact whether those severe buying opportunities come down the pike or not.
Correct. And it also, I'll just make one comment on that the silver lining here could be that, the old adage of how do you solve a problem, you find a bigger one. And for a long time, the problem has been, this anti-landlord sentiment. And I do think that we have a common enemy in New York City now, which is defeat the virus and kickstart back the economy. And some of these voices that were being heard are going to be drowned out. And I do commend and just applaud everyone that is keeping their buildings clean, that's maintaining essential services. I do think that this is being noticed by our legislators, and over the next 12 to 24 months, as the plans for recovering, unveil, it doesn't go unnoticed. So, keep doing what you're doing. The credit will be given, eventually. And I want to applaud everybody out there that's maintaining their buildings. I think rents will have to fall in certain places, and there's going to be some dislocation. And the buyers that are calling me left and right are eager to buy at the same cap rates on a slightly depressed rent roll. And I think those are the trades, if I look back to even 2009 to 2011, that were quote unquote maxed out, but then the rents just went back up. You didn't even have to do anything. They were already renovated apartments. That could be a very, very clear strategy over the next 6 months. But the buyer demand is still there. So don't think you're negotiating in a vacuum as soon as we can return to our offices. I think right now you're in the biggest vacuum you have.
Yeah, that would be one of the questions is, how deep does this recession go? How long does it last? And does it create an economic environment where free market rents actually drop, thus creating a longer term opportunity for buyers? We wanted to keep these videos short. Joe, I wanted to just throw the last kind of comment out to you from the lending environment. We've had a couple, we closed a big deal last week. We've got a couple other ones that are in process right now. That's probably the third question that everybody asks is what's happening with lenders. What comments can you make about that category for people?
Well, I'll tell you, we're closing a deal right now, and the bank, the heads of the bank came out and inspected last Monday as everything was going on here. We're closing the $14 million deal on the Lower East Side, and the bank cut back on proceeds slightly, but showing up to the table, and we're closing as we speak right now. It's virtual. I know a lot of the banks are adjusting to the way they're doing closings and getting out in front of that. I think as far as any borrower working with a current lender, you got to be very cognizant of who that lender is, and are they able to close in this environment? Because I'm hearing from clients that there's some of the refi, some acquisition financing that was already in process, CMBS especially, they're pulling out of certain deals. So some banks are just totally on the sidelines, and there's other banks that are working with their borrowers, especially long-term clients, to get deals done today. So, working with your debt broker, working with that banker, making sure that bank is showing up to the table today, and has the track record to get it done in this environment.
I'm going to read a text that I got from a mortgage broker who from a bank. The banker said to him, multifamily only market rent deals, max loan to value 50%, minimum debt coverage 1.5. So that's like a 50% difference in the terms that they were quoting. But your point is really you just have to be so connected, and if you're doing a deal, you almost have to talk to everybody in the deal every day now because things are changing so much. So
100%.
Yeah.
And also, their banks are putting bigger interest reserves.
Yeah.
So
I have a lot of buyers that are recognizing if they have the cash, the smarter move here is to close cash, wait 6 months, refinance then when hopefully the financial markets aren't in as much turmoil and you can really benefit from the low interest rates. Like the Fed lowered to 0, but the rates in the real economy haven't gone down yet. So, it's almost the buy refi is a smart strategy if you're liquid enough to do that.
Yeah, it's a great point. Well, we wanted to keep these short, and whether you're listening this on the podcast and behind the bricks, or you're watching the video, we just wanted to say to everyone out there, at this point, we can just be a resource for you in terms of information and market contacts, and just feedback on what people are doing in your position in the industry to make the best of the situation. And we hope everyone is basically staying safe and adjusting as well as possible to what's happening in our world. So with that, thanks for having this conversation, guys.
Thanks, Peter.
Okay.
Thanks, Peter. Be well.
We'll talk to you soon.